want to stay with Facebook because we are joined by one analyst who says its shares are definitely worth buying no matter what. Bhatia is the managing director with Stern AG. He's on the phone with us, has a buy rating on Facebook, a $46 12-month target on the company. Paul Kedrosky is joining us as well. A Bloomberg contributing editor is also with us and will be with us throughout our Facebook special coverage today. Arvind, let me start with you because I talked to you a few weeks ago when you first put the buy rating on Facebook and the $46 price target. Hearing more and more news out about the company, are you still comfortable with your recommendation and your price target?
Yes, I am. Thanks for having me. Look, I think we've said then, and we were going to say it again today, that this is a multi-year story. And you were talking about, on a quarterly basis, could there be hiccups? Absolutely. I would fully expect them, particularly given that they have made it abundantly clear that their focus is on the user. And I think that's a long-term strategy, and I think that's the right strategy. But what that means is, unlike many other companies, they're not going to be necessarily playing the quarterly game of making or exceeding expectations just by making some short-term changes. So expect that volatility in the stock and in the company's results for quite some time.
What do you mean quarterly game? You mean that they're not going to try to set the ball low or bar low and exceed that, or what do you mean?
Or, sometimes companies will take short-term decisions which will help the next couple of quarters, which may not be necessarily great for them 2 years, 3 years out. I think in this case, we are expecting them to not make those decisions that are short-term in nature. So even at the expense of perhaps revenue or profitability in the next quarter or two, I think they will focus on what is going to be good for this company 2 years out, 5 years out.
Paul, you like the company, you don't like the stock.
Yeah, in short, I don't. I mean, not to say we know what it's going to do Friday. My guess is that on Friday, this thing probably maybe closes at $60. We're going to blow out Arvind's target probably on Friday. And then the issue is what happens after that. I mean, there's so much retail interest in this thing that it will take it, probably markedly higher and maybe even higher than that partway through the day. And so the question is so what happens over the next sort of 6 to 12 months through these quarters that our guest is talking about? And my guess is that you're going to see a lot of volatility, in part because they're probably not going to manage to earnings expectations, but also because of this incredible overhang of stock. Because you have to remember that probably 2 years ago, Facebook went public. Most of us didn't notice. It just happened on something called second market. It happened, 18 months to 2 years ago. And what we're seeing now is it going public to everyone else with shares already, a huge overhang of stock in the secondary market in large institutional investors who will all cheerfully sell at prices from 25, 35, 45,
So you're saying the
bucks.
next 12 months there will be this overhang of private investors who will want to dump their shares at some point, and then that's going to drive the stock lower.
That's going to at least control the upside. It may not drive the stock down to $15, but it's going to make it harder for the stock to really ramp up over the next 6 to 12 months.
That's a good point. Well, Arvind, what do you make of that?
I think those are all valid points. I think we're all making the assumption that this is going to, shoot up to those very lofty levels. Look, our 2-year price target is $59. So clearly, we think that from the IPO price, there is significant upside. And the research report we put out was catered mainly for people who are making a decision on whether or not to get into the IPO, whether that price range the company is offering the stock at is a good price range to get in. Again, if the stock blows past our target price, that's something we'll have to take a look at. But I think our main point here is in the price range the company is offering this deal is pretty attractive.
Arvind, you mentioned in one of the risks, though, in your report is that you didn't get to talk to management when you put together your buy rating.
Correct.
Is that unusual?
Well, look, I think they are not allowed to talk to analysts during their quiet period. But, Facebook, like you guys were talking about earlier, this company effectively has been public for quite some time already, and we know from the last couple of years that there was a lot of demand for this. We saw their ad revenues continue to ramp. We also cover Zynga, which is a 10%, 11% revenue generator. So we do have that check as well. So we remain comfortable that in this case, despite the fact that we haven't talked to management, and that is a risk, that our analysis is correct.